Most traders do not necessarily guess the wrong market direction. They just enter the market in the wrong time. They identify an old high and expect the price to reverse before actually swiping that high. Vice versa, they identify an old low and they expect the price to reverse and enter a buy before that low gets taken. Prices keep moving in the direction of the market, and then what happens? Their stop loss get triggered and they lost the trade. But then a few seconds later, that trade actually goes in the direction that they expected. They were just too early in the market. In this video, I'm going to show you exactly how to work with liquidity sweep and when is the right time to enter the trade. Because entering before the sweep could be very dangerous for your trade, and you could get stop loss before actually the trade moves in the direction that you expected. So certainly here, you understand the correct direction of the market, but you have the wrong timing when it comes to enter the trade. But don't worry, I'm here to solve your problem. What's up traders? This is Francesco at FPM Trades, and today in this video I'm going to introduce you the first part of Find, Plan and Manage. Today we are going to find the bias of the market, identify where the liquidity sits in order for us to take the trade. Liquidity is one of the most powerful concepts that we will be using when trading, but if you do not understand how liquidity works, that could be a very big problem because you might get a lot of stop loss which are unnecessarily, and probably the market is going to go in the direction that you expected, but simply you were too early in the market. So in this video, I'm going to teach you how to use liquidity. Remember, liquidity is not just a tool that you need to use in order to enter the market, but it is one of the concepts that will help you to understand when the market is ready to reverse. Before we jump on the chart, we need to explain exactly what is liquidity. And I'm going to do that in simple words so you do not overcomplicate your trading journey. Liquidity can be found in an interesting area where there's a lot of orders waiting to get triggered. For example, below an obvious low, we're gonna have a lot of stop losses from buyers and also a lot of orders waiting for a seller breakout. This is why previous lows and previous high are attracting zone for the price to reach. Some of the most common liquidity zones are, for example, the previous session low, the previous session high, the equal highs, the equal lows, or for example, the previous 4-hour highs, the previous 4-hour lows. However, this does not mean that anytime the price reaches these areas, the price is going to reverse. The price could definitely take one of these highs or lows and reverse, but could also break through and continue the journey to where it's going to be the next stop. And this is the reason why we need contest in every time we see a liquidity sweep. So in small words, what is a liquidity sweep? Well, a liquidity sweep is when basically the price moves towards these highs or lows, and then basically once it takes away these highs or lows, reject the liquidity area and then reverse. So what can happen is that many buyers or sellers, for example, if the price is going towards a previous high, a lot of sellers enter the market too early as soon as they see the price getting close to the previous high, and they get stopped out because the price literally take out the previous highs, keeps going towards a liquidity area and towards a possible rejection block, and then what it happens, the price reject and then start to reverse. So if you're entering too early before the liquidity sweep actually happen, you're gonna get stopped out 100%. So this means that not necessarily every time we take a previous week, so a previous high or a previous low, the price is gonna reverse. We need to wait for some contest, we need to wait for our confluences, and then once we have those, then we can decide if to enter the market or not. And so this marks also the difference in between liquidity sweep and liquidity run. The liquidity sweep, once you have the sweep of the previous high or previous lows, we start having some sort of rejection, and then we have some confluences that allow us to take the trade. The liquidity run instead will basically go through all these confluences and will say to you, no, I'm going to go lower or I'm going to go higher depending on where the market is moving to, and I'm going to find the next liquidity area in order for me to then maybe reverse the market. So you will see all your confluences that will have a huge X. So you will have basically rejection from your confluences, And that will make you understand that this is not actually a liquidity sweep, but is a liquidity run. And so probably instead of entering a reversal, you might find a continuation type of trade. In these two examples that you are watching on the screen right now, you can understand clearly that one is a liquidity run and one is a real liquidity sweep with market reverse. When the price approach these liquidity areas, there are some questions that you need to make to yourself. The first question is certainly, does the price actually showing to you that there's a potential of reversal with a displacement? Does it break lower time frame structure? Does it create an inverted fair value gap? Does it reclaim the area? Or does it continue holding beyond this level? This is why I never use liquidity as a standalone enter or buy sell type of signal. So let's jump on the chart and assess and understand how we are going to trade the market, how we are going to find the bias of the market, to find our setup, to find eventually an entry. So the first thing we do, it is certainly go to the higher time frame and understand the bias of the market. The higher time frame means that you are going to use the daily, the 4-hour, and the 1-hour time frame in order to understand if the market is bullish or bearish. Looking at this market on the hourly time frame, we can certainly say that the market is trading bullish. So what am I looking for right now? I'm looking for an area that has some interesting type of zone which could give me a reversal pattern if the area gets triggered by liquidity sweep and then reverse. And if I look at this, the first thing that I see is that we have a sell side liquidity right here, which potentially could be an area of interest, because if the market comes down as it's doing right now, goes through and so taking away this low, okay, it could potentially reverse. Also because we are tapping in a 1-hour bullish FVG that could act as support and as reversal type of support. So what do we see right here? We see that the market goes high and then goes back down, retests the hourly FVG, and then goes back up, tries to create new highs. It eventually does create new highs, but then eventually starts to drop again. So right now, what we need to see is that the price goes down, take this liquidity away, and then reverse within like a certain zone. It could reverse eventually right here, or it could also reverse down here. We have another bullish FVG just right there, okay? If I go on the 4-hour, yeah, so as you can see, even on the 4-hour, we have like a bigger bullish FVG right there, and we have a smaller bullish FVG right here, okay? So these two zones are zones that the liquidity could eventually get taken and then reverse, okay? Because those are the zone where we have the stop losses from early buyer, or we have entries from early sellers, okay? So if right now I identify, let's say that I am going back right here, okay? And I see the market doing this. And I see an SSL right there. What do? I go straight away on the lower time frame and I try to see what the market is going to do around this zone that I marked on my screen, okay? So if I let this play, you will see that the market will eventually come down and take away this sell side liquidity wick that we have right there. Here it is. So we took this sell side liquidity, even if we just like sweep this liquidity just a little bit, but we did go down, okay? So for me, this does count as liquidity sweep, because as you can see, the candle closed below the previous sell side liquidity low on the hourly time frame. And now what we're looking for is for the market to have some sort of rejection reaction in this area, because we know that we have taken the liquidity. So there's two things that can happen right here. Either the market retest, okay, and then keeps going down. So that means that we have a continuation model, or it basically breaks through this sell side liquidity right here and then reverse with some sort of confluences that we are going to look later on. So if we see right now what the market is going to do, we're going to see a reversal because the market basically took the liquidity, took all the stops, okay, of the early seller, okay, because the sellers, what they do is usually as soon as they see this drop, they will enter the sell right here on this candle, okay, and they will get stopped out right away because next candle is gonna basically go to the previous week, and so they're gonna basically get stopped right away. And instead, the early buyer, that what they will do usually is they will see the price to go inside this FFG and they will just buy because, but you can't buy because even after the liquidity, okay, even after the liquidity sweep, as you can see, we actually tapped in, but before we actually reverse, the price came all the way down. So we can't just buy because we tapped into this liquidity, okay? We will get stopped out right away. So right now we are waiting for the confluences, and looking right now what I'm seeing right now, okay, we have our confluences because if we go on the 2 minutes time frame, what do we see here? We see an inverted FFG right there, okay. This was previously a bearish FFG, now it's an inverted FFG, okay, which acts as a support for us. And so as you can see, the price closed above the bearish FFG, so violate this FFG, becomes an inverted FFG, and then automatically I place my entry. In this case, I was trying to target the previous high because I wanted the price to go higher, okay? So more or less that will be my type of like trade. It's a 1 to 2, more or less, okay? And now if I let this play, you will see that this trade had almost zero drawdown and then goes straight to take profit. Okay. So right there, do you see this? Boom. As soon as I see this rejection, okay, for me, I am most likely already a break even once we take out this previous high. So right there, I'm probably already at break even. And then right here, will probably take 80% off of my position because it's a 1 to 2 already. So I'm not looking for a long run. I'm looking for a 1 to 2 type of risk to reward trade. And I'm good. I'm good with this because even if the price decide to come back down, which eventually it will, because I've seen this this trade before. So it doesn't matter anymore because I took 80% of my position off. I took my partial profit, and I'm just letting the runner do whatever he wants to do. If he wants to go higher, if he wants to reverse again, whatever. But this is how you use liquidity sweep in the right way. So you go to the higher time frame, you mark your previous high, previous low, or sell side liquidity or BSL, and then you wait for the price to visit this area. Once the price visits this area, if the price breaks through and then shows any sign of reversal with all your confluence that you have, then you can certainly go and take a trade towards the opposite market direction. If instead the price continues towards the liquidity, okay, then that means that probably we are not going to stop right here, but we are going to stop into the next liquidity zone right down there. I mean, imagine this liquidity zone. Like you have such a big room to look for a trade, so you have no rush. So don't get FOMO, okay, if you miss the trade and the trade is gone, because you're going to have anyway more opportunities later on in the market. So we've seen the liquidity sweep. Now let's jump and understand the concept of liquidity run and how to trade a liquidity run compared to the liquidity sweep. Because a liquidity run means that we are going to trade with the market. We are not looking for a reversal. So in this case, in this example, this is a tricky example, I have to be honest with you. But we can see the market clearly was like bullish in the beginning, then it retest, and then right here shifted bearish. So this become the lower low, this is the lower high, potentially. Then here it shifts again bullish. And so this kind of like, to me, looks like a manipulation to the upside because this happened literally a New York opening. Okay, so I'm not surprised to see this type of move. But usually what it happens at New York opening is that the price manipulates to the opposite direction of what it's expecting to go and then reverse, okay? But I'm not right now here to explain to you how to trade New York opening. So let's check it out what happened right here. So we see that the market then shifts completely and comes down, okay? And we have a sell side liquidity right here. You can see the sell side also on the 4 hour, okay? On the 4 hour, we have this week here. So that's our sell side liquidity, okay? On the 1 hour, we have actually a double bottom type of sell side liquidity right there. The market right now is trying to take away these lows, okay? And then we don't know if the market is going to continue to go down or to go up. For sure, what we see right now is that we are kind of shifting bearish again. So I'm expecting either to create a new lower low to then create a new lower high. Okay, so the market to do like this. And so in this case, what do we have? Do we have basically a continuation model, a liquidity run? Or the other thing that can happen is that the market, you know, from here, basically goes back and run to the upside. So in this case, we have again a shift of the market and we have a liquidity sweep type of entry model. But in this case, I will show it to you guys that we're going to have a liquidity run. In fact, so what I'm going to do is as soon as I have the sell side liquidity swept, okay, what I'm going to do, I'm going to lower my time frame, okay, and I'm going to look for an entry. So right now, we did sweep the sell side, okay, and we need to understand if we're actually going to reverse or continue to the downside. In this case, it's easy. Why? Because once we sweep the sell side, and you can see it, we sweep it right here, okay, where you see this red line that I draw, it's from the sell side, okay? So once we sweep that, what does it happen? The market sweep, and then we are trying somehow, okay, to go back up, but it fails. It fails to create new high. And here you have multiple ways to enter the continuation model, okay? The first potential way is to wait for a rejection of a previous bearish displacement. And as you can see, we do have a bearish displacement on the 1 minute, on the 2 minutes specifically, okay? And also on the 5 and so on. But what I am looking right here is that on the 1 minute, okay, the price take out the previous sell side to the previous low. And then now what he's trying to do is going up. But then what does he find? He find a big ass FFG, potentially like that, okay? Because we have two aligned. So the price taps into this bearish FFG, okay? And what does it happen? It gets rejected. So as soon as I see on the 1 minute this rejection, okay, for me, potentially, I could take a trade. And my stop loss most likely will go above the body of the candle that created this FFG. So in this case, my stop will be right there, okay? And as soon as I enter, you know, there's a little bit of noise. The market kind of like consolidate right here to accumulate orders, okay, of people that, you know, thinking that the market will, you know, reverse. But instead, what it does, the market starts climbing again, okay? So as you can see right here, we are targeting a 1 to 2 again, okay? Type of trade, but potentially you could actually stay in the trade and target even more because this is a continuation model type of trade. Okay, now instead, we've seen the liquidity sweep and the liquidity run type of trade and how to really trade those. But there's another thing that we need to see, which is probably the one that is going to make you a lot of confusion in your head. The one that we need to see is definitely the one that you do not enter. Yeah, you do not enter, because this type of market condition, it's unusual, but it can happen, specifically when there's like news around, and it can make traders to lose a lot of money because the market is confused and you are confused. So for example, what do we see here? If I go on the hourly time frame, okay, what do I see? I see very weird things. I see all these lows here, okay, all these lows, all these lows and these lows, okay. So these are all potential lows that we could reverse, okay, or continue, okay, to go down with this big candle. But what happened right here is that the candle goes all the way down, okay? And so people will think like, okay, from here, what? From here, what? You expect a reversal after this huge candle? Well, if you do that, I have to shake your hand, because to expect the market to reverse after this huge candle and coming so close to this SSL, it's insane, guys. Of course, if you did take a buy from here, good job. But was probably the safest trade in your career? No, this was a very risky trade, specifically after this ginormous candle to the downside. So what happened right here is that we come all the way down here. We do not swipe this SSL, okay? We did swipe all these lows, but to be honest, if I look at the market right now like this, okay, I'm not so sure that, these lows, were those type of lows that will give me a reversal around this level, okay? I will prefer more the market to come right here on the bottom, swipe this, and then reverse. But again, what we see here is very weird. So the market comes all the way down. It doesn't swipe the previous SSL right here, okay, on the hourly time frame, and then it starts reversing. For me, this trade is a trade that I will probably never take, simply because if we look at the market condition, right, on the hourly candle, what do we see here? We see that the market is in a bearish trend. You'll probably think, from here, we're going lower, we're going to sweep this SL. You will enter probably with an early sell right there. And yeah, you'll get stopped out right away. So that this is just showing to you exactly that there are some certain market condition that you cannot trade, or you should not trade, just to save your capital. It's better to not trade one day than trade every day and get wrecked by the market, okay? And I wanted to make sure that you see this type of like market condition, because it is happening more than what it's supposed to. Just so you know, when you have this type of like candles, when you have this type of market condition, it's better to stay away from the chart. So the biggest lesson from this video is how to recognize a liquidity sweep, how to recognize a liquidity run, and when do not enter the market. We also understood how to find the bias, okay? Of course, we can make a video specifically about finding the bias and understanding the market structure. If you want me to do so, please leave a comment below and let me know about that. But I hope that from this video you understood that the market does not owe you anything and that you do not owe to the market. But it is important that you are entering only when you have the right context, you have the right confluences, and the liquidity has been grabbed in the right moment. And I am sure that right now you'll go back to the chart and you start drawing your lines, your previous high, previous low on the higher time frame, and you'll understand better why the market chased those highs and those lows and then reverse or continue to go in the right direction. If this video helped you, make sure you smash the subscribe button and keep following FPM trades, because here I'm going to teach you the ABC of how to trade the market in simple words. That's my goal, to teach you in the most simple way, because you could watch hundreds of YouTube channel and YouTube videos and you will see that you're gonna have so much confusion at the end of the day. Meanwhile, I'm going to try to teach you in the most simple way, and I hope I did manage to do so in this video. So I'll see you at the next one.